Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. That's
Excellent.
clear. And I'm going to share my screen. As a note to anyone joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data or analytics. If you have a question, type it into the live chat on YouTube. Will's watching it. He'll read them back to me. And to give you guys a couple minutes to put in those questions, we'll start out taking a look at the pre-market report to see if we could get insights, what's going on in the pre-market hours. Then we'll move on to the questions. Okay, so this is the pre-market report. It's a report on stocks that are trading in the pre-market hours. Up top here, initially you have this calendar view. It does allow you to go back in time to see what happened historically on a specific date in the pre-market hours. So far, today we're November 27th. We see here we got 380 stocks trading higher in the pre-market hours, 346 stocks trading lower. As far as volume of shares, we got 176 million shares trading on up volume versus 41 million on down volume. And if we convert that volume to dollar value, we have $1.1 billion worth of stock trading higher, $867 million worth of stock trading lower. To me, it looks more like a mixed bag here, slightly leaning towards the bullish side of things, but pretty even, relative to what we've been seeing on previous days. Let's go down and take a look at it from a couple more perspectives, and then we'll move on to the questions. So down here, we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. So we got 43 stocks. They made our percentage gainers list, 35 on the decliners. So from that perspective, again, slightly more bullish in a pre-market trading. So the activity is slightly more bullish. However, if we look at this list, you see we got small cap stocks in there. We got ETFs, leverage products, any security that's listed on a major U.S. exchange, if it's trading in pre-market hours, and meets our thresholds for the biggest percentage gainers, biggest percentage decliners. Keep in mind, these are stocks that have to meet certain liquidity, price, volume thresholds to make this list. And to narrow down this list to a smaller group of stocks, we could use the filters here above. If you have a watch list, you can filter by your watch list. We're going to use this one in ETF. I'm going to click on that. You get a drop-down menu from different ETFs, exchange traded funds, to select from. Let's choose this one, SPY, as an example. When you do that, the list below gets filtered by stocks that are holdings in the SPY ETF. And here we got 3 stocks that made our percentage gainers list, 200 decliners. So that also shows that not much going on in the pre-market hours as far as a big lean towards bullish or bearish side of things. And we probably are just coming to the end of the November where things slow down. We have Thanksgiving. We're going to have other holidays now coming up in December. So I think things tend to slow down in this period. So if we have questions now, Will, I'll take the questions.
No questions have popped in yet, D.
Okay. let's go to, I'm gonna come here to the home page. I had some questions regarding some of these alerts, and here we kind of just started this alert system, see how people are using it and what kind of alerts we could add to it over time. So I'm going to kind of just, these in the beginning are just a couple alerts of events coming up in stocks that you may be following. So if you're using the system a lot and it picks up on stocks that you may be interested in, an event comes up, it'll pop up in there. Let me take a look at let me see if I could go back. Look at, let's look at this earnings alert here. So when you click on it to the right, it gives you more details about the alert. All right. So over here, ZS earnings coming up after the market close. And then this kind of analyzes the current option markets from one perspective and gives you some details there in case you want to go and research it further. So let's take a look at this specific alert. So this is ZS earnings coming up after the market close. When the market, we're not open now, the market closed at the money straddle, implied a move of 8.8%. And so that's what it's letting us know. So far, the earnings straddle, the premium buying a call, buying a put is implying an 8.8% move, which is the break-even point for the buyer and seller. Right, that's where the straddle is priced. So from the buy side, if the stock moves more than that, that means that straddle would be profitable. If the stock moves 10, 11, 12%, that will be profitable. If it moves less than that, then the straddle after earnings will most likely come in. So that's where it is so far. So let's just compare that to some benchmarks, because just looking at that alone, we don't have really enough details or information to determine, is that on the high side, is that on the low side, is that fair value. How can we analyze it a little bit further to perhaps get a bigger sense of where is the straddle priced in relative terms, right? So nobody knows what the market is going to do after earnings, because that you have to wait for the earnings to come out and then the market reacts. So we have no idea about that. But in relative terms, without knowing that potential outcome, how is this price on a relative basis, right? What benchmarks can we use to determine, is this on a high end or low end? All right, so here are the different benchmarks that so far we listed here as starting points. And again, these are quick starting points in case you wanted to go and research it further, right? Because then we have other tools that you could go in there and really dig deeper into, historical earnings moves. So the first one is just taking a look at the last 12 quarters. Just show me the actual move, the historical average move in ZS in the last 12 quarters. How much did it move up or down? Right? If we averaged all of them out, absolute average, what was the move? And here we see that it was 11.3%. Okay, so basically this is telling us that that the actual moves after earnings exceeded this so far, 8.8. So we have two benchmarks so far to compare. So let's go to another one. What about just the opening gaps? So this is the average of the 12. If we took the opening gaps, so this is the entire move from the previous day to the next day, but just the very initial move. So if it reports earnings after the market close, the next day the opening price will usually gap, because then the markets are able to analyze, reprice the stock based on the information reported after the market close. So you'll see a new price at the open, right? So what about that initial opening move, right? How often did the actual move at the open, right, exceed this 8.8%? In other words, if we looked at all the opening gaps, if the opening gaps were below were they below 8.8%, or were they above 8.8%, and how many? So this is telling us that historically 45% of the actual opening gaps were below 8.8%. Okay, the rest were above. Okay, what about the full move, right? How many? So remember, this is just looking at the average move. This is looking at the frequency of the moves that exceeded 8.8%. What about the full day, right? So, because remember, this average could have gotten pulled up by a very big one move in there that skewed the average higher, right? So if there's one move that it moved 100%, obviously that pulls up the average. So this is looking at the frequency of the moves. So then what about the full day? If we looked at from the previous days close to the end of the day, how often did the move exceed 8.8%? How often was the move below 8.8%? Right? Because remember, if the move is above 8.8%, the straddle will become profitable because it'll be in the money by more than 8.8%. If the move's 10%, one of the options will be in the money by more than enough to pay for that premium for the call and the put. So this tells us that 41% of the historical moves were below 8.8%. The rest were above. So far, this one, and this one is saying that based on our historical benchmarks so far, we're pricing it on the lower end. Why? Because on average, the moves are above 11.3. 45% of the moves were below 8.8%, meaning 55% of the actual opening gaps were above 8.8%. It could have been 9%, 10%. If we waiting all the way to the end of the day from previous close to next day's close, that 41% of the moves were below 8.8%, 59% were above, moved more than 8%. So the 8.8% looks on the surface so far as is getting priced. The straddle is getting priced on the lower end of things. Okay, that's what so far we could glean from these benchmarks. So another one we could do is say, well, if we took the previous day's close and then we looked at, and after the earnings were released, if we looked at the next day's trading, the entire day's trading from opening to close, we analyzed all the trades from the opening to the close, from 9:30 till 4, so at 10 p.m., 11 p.m., everything in between. If we looked at all the trades of the stock, and then we said, how often at any point of the day did the stock move by big enough percentage to go above 8.8%. All right, so maybe it doesn't do it at the open. Maybe at the open it opens unchanged, right? And maybe it doesn't do by the end of the day. And maybe by the end of the day, the stock is unchanged. But they're still trading in between and it's moving around. So the stock's still fluctuating and has volatility for the entire day. And what we're looking at is at any moment, at any given moment, during the trading, how often, did it actually at least touch this amount, right? Or go above it, at least go slightly above 8.8%, meaning that the straddle would have been at least a break even at that point. So that happened historically 86% of the time. So 86% of the time. So 14% of the time, it didn't move enough at any moment of the day. And to hit 8.8%. 86% of the time, that if we measured it from, to the very high of the day or low of the day, if we measured it that way, 86% of the time, it at least touched that straddle amount. So from those benchmarks, those are historical benchmarks. Now we'd have to go analyze it further, what's happening in ZS now, or is there something else we're not taking into account that could potentially make this move more muted than previous? Okay, we'd have to handicap that if we could find it. But just using these 4 initial benchmarks, and we could look at more, it looks like so far, that this straddle is getting priced by the markets on the lower end, right? Lower end of our historical benchmarks.
Hey, D?
Yeah.
Rob asked, Will, is the straddle priced for mostly 1 day's trading numbers, or is it variable?
Well, this is looking at the option straddle, the actual, the option straddle that's going to cover this earnings, right? So that's what it's looking at, the option straddle that covers this earnings. And it's looking at the
Previous earnings.
Yeah. So this one is looking at the nearest expiration that will cover earnings, and it's looking at that straddle because that's the straddle that's going to reflect the most of what people are anticipating that earnings, right? And that's and these so far, all these numbers so far are looking at the historical actual moves of the stock. So all these are not options, these are actual moves in the stock itself post earnings. All right, that's what this is comparing. Actual versus. So this particular analysis is comparing the market's anticipated move, which so far we don't know what the move will be, right? Because that's unknown, that's coming up. If we knew that for sure, this would be a very easy bet. But we don't know that, right? What we're trying to see is, well, we know where the options are getting priced, right? Because we could observe that. We could go and look at the options prices and figure out what the percentage move on that straddle, what is the required percentage move to hit break even, and then we'll know, what it has, if it has to move above that for the straddle to be profitable from the long side, below that for it to be profitable on the short side. But that we could observe right now. And we could also observe the historical moves, right? These are historically what happened. So we're comparing the two to start to make a determination, well, relative to these benchmarks, relative to, certain perceived fair values that we could gain from our initial benchmarks. How do we look? How do we compare? How much do they deviate by, right? Do they deviate by a lot? And if they do, why? Like, why would they deviate? You got to keep in mind there may be good reasons too. There may be good reasons, that it could be priced on the low end. May have been bigger uncertainties in previous earnings reports that don't exist today. You need to go dig deep in there. Could have been, outcomes for certain sales or lawsuits, or whatever it is that it could have existed before but doesn't exist today, and you need to know that information as well. And there could be reasons why sometimes it could be more volatile, or investors are looking at different metrics today than they did historically. Like right now we have technology companies, and now people are more interested in metrics or outlooks on AI, for example, in some companies, right? That may have not been important metrics before. Like maybe, let's say Facebook or Meta. Before, people were looking at user growth or signups, or maybe that was the metric that was important. And maybe at this point, that's not as important as, well, what's going on? Markets are pricing in their AI technology, and they want to know what's going on with that. That might be the bigger driver. And all those details, you'd have to put all the pieces put together. But these are for initial, metrics, benchmarks that we start to look at, to then say, okay, maybe I want to look deeper into it. Maybe I want to see, is the market just, priced maybe too low because there's an imbalance of sellers versus buyers? Is there, an opportunity there, shaping up? Or is it correctly priced, or maybe it's overpriced? I don't know, but you'd have to go in there, always look further, because one thing to remember is there's no one single metric, right? There's no one single metric or one single calculation that you could completely answer all the questions out there. Each metric kind of tries to answer a different question or point you to something different. So it doesn't encapsulate, all the information out there, but these are just certain ones that you could start referencing as a starting points.
All right, Lauren, this straddle discussion brought up a question from Lauren. He says, "Hey, Will, send my regards to Dimitri.
Thank you.
And ask, is there a way to look at SPY's weekly straddle as we can on the 0 DTE tab?"
So for SPY, you mean like the performance for the week, like say from Monday to Friday? Is that?
It says weekly meaning. Actually, he answered this before you asked it. He said weekly meaning from Friday's close to next Friday's close.
Yeah, I think we have it from Mondays to Friday. Let's look here. Let me take a look here. So I believe under, let me see if it's under tools at the money straddle. So this is SPY. So I believe we don't have, and I'm not sure when they list it, if they list the weekly on Friday or on Monday morning, but here what we have is looking from Monday to Friday. All right, so this is Monday. We take a snapshot at 10 a.m. on Monday. And I think we started doing that because the first half hour is pretty volatile. We wait for it to kind of calm down, and this isn't just SPY. This is just across the board where markets, tighten up. So I think this is looking from Monday at 10 a.m. to Friday's close. And this shows the performance of the straddle. So this is week ending November 20th. Right, the straddle was down 17%. Week of November 30th. So I'm sorry, I think this is, let me see if I could open this up. So, okay, so here are the details. So week beginning November 20th, straddle was down 17%, up 109%. So you could see here that the straddle itself, right, the straddle in SPY is volatile. Well, you could see how the outcomes of the straddle, where the returns themselves, right, the variability of returns are very wide. It could be from, down 68% here to up 140%. So that's something to keep in mind. The variability of these returns are very high. You're talking about when we're dealing with options, that's not uncommon, right? The variability of these returns are very high. And of course, there are methods of hedging and stuff that you could do to try to mitigate that, or try to bring the volatility of those returns lower by delta hedging and gamma hedging. But if the straddle alone, it looks like, this is the variability of return. So here, if we just look at the last, I think there's like 12 weeks, right? We'll see that 55% of those straddles from Monday to Friday's close so far have been positive, meaning that if you bought it at that snapshot on Monday, right? So here's the snapshot, right? 10 a.m. So this is where the stock was. This is the call. This is the put price, right? This is the total dollar value if you bought one of each, right? This is what the move required, the straddle, for this to be in the money. So you could see here that from the stock itself started $452.17. It ended $455.13. So this straddle moved 0.7%. Okay, it didn't move enough by 0.9%, moved 0.7%. Right, like $3 from 450 to 450. So the call ended up being $3.29. The put is zero. It expired worthless. So here you could see that the return was negative, lost 16.6%. Didn't move enough, right, from the long side. And that's how it's going back week after week. And it's showing you, here's a snapshot. Here's what the markets were. Here's where the markets ended at 359, right? So here you could see it was a big move from 438 to 450. The straddle was needed a 1.3% move to break even, to move 2.7%. So your investment of $559 was worth $1,168 at the end, right? 109% return, right? So that itself is showing as a just the straddle from buying to 1 point and waiting till Friday's close, right? So some of these are not expiring because some of them don't have weekly. So if it's monthly, we're just looking from one day to the next. And this is showing how the stock moved, where the straddle started out, where it ended up, and the return. And then we have two other ways to look at it: delta neutral and delta rehedging. So the delta rehedging was if you at the end of each day, the stock moved and you bought or sold stock to get that position back to delta neutral. Okay, so that's another method of trading the implied volatility versus realized. That would be more like the Black-Scholes model type of rehedging. Okay. So this is going back and showing how it's performed in the most recent history. Right. So in the most recent, sorry, what's that?
No, I was going to say that's awesome. And that was very helpful to Laurent. He says, thank you. We're a minute into the opening bell. Great job. We did have a question outstanding from Michael McCrae about watch lists. I'll send that to you. Maybe we can get that tomorrow. Great job, my friend.
All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day. And yeah, hope to see you guys tomorrow.